Nowadays, when you start a hedge fund, you have to look at the various exemptions in the United States that are afforded to you as the manager and to your fund. If you're trading typically equities and options on the New York Exchange and NASDAQ, you have a number of exemptions that rely on in the Securities Exchange Commission. But when you're talking about commodities, futures, and Forex, we have to go to the CFTC, or the Commodity Futures Trading Commission. And there are some exemptions. And we're going to talk about the top 3 exemptions that could be relied on when you set up your Forex fund or your commodity futures fund. Hey, it's Frank Nagy. Welcome to my channel. If you're new here, subscribe to my channel and hit that like button. There are top 3 exemptions that could be available to a Forex hedge fund manager and or a futures and options fund. First is to find out whether or not the manager is qualified or can qualify for an exemption from registering as a commodity trading advisor, or a CTA. Under Rule 4-14, there's an exemption to this registration. To a person that within 12 months has not furnished commodity future trading advisors to more than 15 persons and does not hold himself out as a commodity trading advisor. Well, most people are not going to be doing that, or then you'll have to sit for your exam. So that would be the number 1 exemption that someone could rely on to manage a Forex or commodity futures hedge fund. Now, here are 2 more exemptions for your hedge fund. Rule 413A-3, it's called the de minimis exemption. Now, if you have total assets of $10 million and are operated by already a commodity pool operator, which is exempt from registration, then you have to have at least $10 million in assets, and the pool is registered as a ECP, an eligible counterparty participant, which is called the de minimis exemption. And this reads, assuming that all the assets is met the test, it allows a pool to which not all participants, not all your investors, are themselves ECPs to engage in Forex or commodities or futures. Among those requirements are that the aggregate initial margin required to establish commodity interests, including Forex, does not exceed 5% of the liquidation of the pool portfolio, and the net notional value of the pool's commodity interest does not exceed 100% of the liquidation value. What does that all mean? Simply means if you have $1 million portfolio, you cannot spend more than 5% or $50,000 in margin deposit to control 10 contracts. Let's say they're $100,000 lots of Forex, let's say the euro dollar, to trade. Well, no one does that to begin with because you have no room for maintenance, because obviously if the market drops only by a fraction of a percent, you're going to get a margin call. So that 5% rule is more like you're going to be landing up using 2% of your capital to trade leverage with your Forex, commodity futures pool, or what have you. So with that said, this is not legal advice. This is all pure information. By hiring Frank Nagy Financial Services as your hedge fund consultant, we will show you and introduce to you various opportunities to work with attorneys and fund advisors, administrators, auditors, accountants that can help your hedge fund grow. The last rule is Rule 4.7, and this is an alternative to the de minimis exemption. So if you say you don't want to have restrictions on the margin, you want to leverage the hell out of it, your investors have to all be accredited investors in the same fashion as the SEC. They have to have a $2 million investment portfolio to be eligible. You would still have to register as a CPO, a commodity pool operator, but the upshot is there's no disclosure requirements that you would need to provide your investors. Now, all my hedge funds that I set up for all my clients all have a private placement memorandum, subscription agreement, all the risk disclosures, investment management agreement, and everything that requires full transparency to your investors because they demand it. And hiring a hedge fund consultant like Frank Nagy Financial Services will make your fund grow.